Welcome back to the channel. So we are going to do certain concepts of accounting. Question number 189 MCQs. That is return on capital employed. When we talk about return on capital employed, the simple formula is net profit before interest and tax over capital employed into 100. That is return on capital employed. Then when we have to calculate return on shareholders fund, we have to take net profit after interest and tax divided by shareholders fund into 100. That is return on shareholders fund. So there is a difference between these two. First is return on capital employed, that is net profit before interest and tax, and in return on shareholders fund it is net profit after interest and tax over shareholders fund into 100. Then question number 191, if we talk about, that is earning per share. Question number 191, that is earning per share. How to calculate earning per share, that is called EPS. When we have to calculate EPS, you should know net profit, that is after. When we net profit after interest, dividend and tax divided by number of equity shareholders. So how do we calculate? We will take all the figures after all the interest, tax and dividend have been paid and number of equity shareholders. The answer will be earning per share. For example, the value is 4 lakh, number of equity is 100. Then what is the earning per share? Earning per share will be 4,000. This is the miscellaneous figure I have taken as a question. Then after this we have proprietary ratio. How do we calculate the proprietary ratio? That is very much important. And when about my speed in the video, you can pause the video and you can see the video again and again. So 192nd question, that is proprietary ratio. How do we calculate the proprietary ratio? This is very simple. In proprietary ratio, we will have total assets. We will have total assets over proprietors fund then we will have proprietary ratio. Here total assets will include the fixed assets and as well as the other current assets. So all type of assets will be there and then it will be proprietors fund and then you will calculate the proprietary ratio. Other important thing when I talk about, that is another MCQ, proprietors fund is also called dash. So the correct answer is also called shareholders fund. Proprietors fund is also called as shareholders fund. Then next we have fund. What is a fund? When we talk about fund is the net working capital. So net working capital is referred to as a fund. So what is fund is the net working capital, and this is the difference between proprietary ratio. Proprietary ratio is equals to total assets over proprietors fund. Then we have proprietors fund, it is also called as shareholders fund, and holders fund is net working capital. Other ratios we have with us, question number 195. Question number 195 we have with us. Question number 195, that is again related to major sources of funds and application of funds. So if I talk about issue of shares leads to dash of funds. Issue of share leads to sources or application, so it is a source of fund. Issue of shares leads to sources of funds. And next question we have long-term loan repayment, dividend payment, redemption of share capital, and loss from operations. These are all the application of funds. It is very much clear what is the application of fund. If you are paying certain dividend payment, you are paying a long-term re-loan, your redemption of debentures. That is very much important. Redemption of debentures is the dash of funds. Debenture of redemption is the application of funds. Next we have with us other important ratio, that is stock turnover ratio. Yesterday also we have done stock turnover ratio. Today again I am doing. So this is the most important ratio with us, stock turnover ratio. How do we calculate? It is the average inventory divided by COGS, that is cost of goods sold. That is used to calculate the stock turnover ratio. Then next we have with us, that is what are the functions of accounting. 1 marks question, 198th question. So we have 198th question about systematic maintenance of records is a dash of accounting, is a function of accounting. This is most important question. Then after this we have, after systematic maintenance of records, we have 3 branches of accounting, that is financial cost and management accounting. Then next is write briefly about cost accounting. Determine the unit cost of output produced or services rendered. Then next we have single entry system, which affect the personal accounts only. That is there in single entry system. Errors of omission and commission. This is very important. Error of omission, a transaction entirely omitted from record in the original books or partially omitted while posting. Such an error will not affect the agreement of a trial balance, as neither the transaction has been entered on the debit side nor on the credit side of any other account. So we have error of omission. This is also related to trial balance. Means in error of omission also we have omitted certain viewpoint or certain concept That is why error of omission will be there, and in error of omission it does not affect the trial balance. If it is complete omission, it will not affect the trial balance. If it is partial omission, it may affect the trial balance. That is error of omission. Then we have 200 question, that is error of commission. Error of commission, one example is wrong posting of ledger accounts. For example, the posting has to be done on the credit side, that is cash to sales. But what you have done? You have done sales to cash. So that is wrong posting of ledger. The transaction has to be done cash to sales. But what you have done? You have done sales to cash. So I have a question. Will the error of commission affect the trial balance? So the error of commission will affect the trial balance. If posting is only to wrong account or wrong side of a current account, the trial balance will remain unaffected. So to make a agreement to error of commission, we have an example that in error of commission, if it is wrong posting of ledger account, cash to sales has been done sales to cash, it will not affect the trial balance, because those who know, trial balance is summation of what? Debit and credit side, right? The totals should match with the totals method, and in this transaction also the totals will match, so it will not affect the trial balance. I will cover this in another MCQ, what I mean by saying of error of commission. Next question, question number 201. Question number 201 we have with us, and in 201 I want to ask you and tell you about various concepts of accounting, which are the concepts and conventions. First, it is GAAP. Everyone knows what is GAAP. GAAP is generally accepted accounting principles. Generally accepted accounting principles are known as GAAP. Next question after GAAP we have with us, that is, there are certain concepts of accounting. First, it is accounting period concept, that is for a 12 months period. Dual aspect concept. What is dual aspect and what is cost concept? What is dual aspect concept? Dual aspect concept says every debit has credit. That is very much clear. Dual aspect concept, every debit has a credit. And we also know one equation, that assets is equals to capital plus liabilities, or I can say capital is equals to assets minus liabilities, or I can also say liabilities is equals to capital minus assets. So this is very much clear. These are the three accounting equations which is going to be very much important in case of accounts paper. Asset is equals to capital plus liabilities. Capital is equals to assets minus liabilities. Liabilities is equals to what? Capital minus assets. So go through these equations, then we will have a question on this, that how do we calculate this particular equation. And this equation is very much important. It will be directly asked in your exam. About the calculation of this accounting equation. Then after this accounting equation, there is an other important concept, that is cost concept. What is cost concept? According to the cost concept, what does the cost concept says? That the transactions will be recorded at historical cost of the particular asset. If the historical cost is 1 lakh, it will be recorded at 1 lakh. If the historical cost is 2 lakh, it will be recorded at 2 lakh. That is the cost concept, and it is basically used in valuation of the assets. After this cost concept, we have other important thing with us, that is convention of consistency, that everyone knows. Then next it is convention of full disclosure and convention of materiality. What is the major difference? Convention of full disclosure says, that is the other important concept with us. Question number 204. Question number 204. That is, what is the difference between convention of full disclosure and convention of materiality? According to convention of full disclosure, every accounting transaction should be disclosed in the books of accounts, whether as footnotes or in the books of accounts. That is one thing as full disclosure. Then next is convention of materiality. Everything which has economic effect shall be recorded. Everything which has an economic effect shall be recorded. That is materiality. So this is the difference between convention of full disclosure and convention of materiality. Next important question we have, what is the difference between capital expenditure? What is the difference between capital expenditure and revenue expenditure? So we all know capital expenditure is for a longer period of time, revenue expenditure is for a shorter period of time. Capital expenditure is on permanent assets, it adds to the revenue, it may add to the value, and it is shown in balance sheet. So this difference is very much important. It is value incurred on the permanent asset, that is called as capital expenditure. It adds to the value of the asset and it adds to cost also. And other important thing, capital expenditure could be the one which is shown in the balance sheet. Capital expenditure is the one which is shown in the balance sheet. Next we have revenue expenditure. Revenue, as the name suggests, is the expenditure which is done on certain type of, which is you incurred for the running productivity or earning. It does not lead to cost, it does not add to value, and it is shown in P&L appropriation account. So it is for a particular type of, it is incurred for day-to-day operations. It does not add to the value, it does not add to the cost a lot, and it is shown in P&L account. Very much clear the difference between capital and revenue expenditure. Now next important question, question number 206. From expenditure only we are doing, and that is deferred revenue expenditure. Question number 206. What are deferred revenue expenditures? Deferred revenue expenditure refers to the expenditure whose expenditure is for a longer period of time, like advertisement expenses which are incurred on a particular day in 2020, and its expenditure will be borne by till 2025. That is for a longer period of time. So that is called a deferred revenue expenditure, like advertisement. After deferred revenue expenditure, we have next value with us, that is the accounting standard number 9. So accounting standard 9 deals with what is accounting standard 9. So accounting standard number 9 deals with interest, royalty and dividend. It deals with these three things. Accounting standard number 9 deals with these three things: interest, royalty and dividend. That is there in accounting standard number 9. Interest, royalty and dividend. That is important in accounting standard number 9. This is very much important. Then next we have what are bad debts, that are uncollectible debts, losses on account of uncollectible debts. Then we have provision for discount on debtors. Provision for discount on debtors, it is a normal to allow. What is provision for discount on debtors? Next question, question number 208. Question number 208. What is question number 208? That is related to the concept of provision for discount on debtors. Provision for discount on debtors. So provision for discount on debtors refers to that amount which has to be paid as a discount to debtors. Now what does it mean? Provision for discount on debtors. So there will be certain debtors who will make early payment. So early payment will be shown on the debit side of the P&L account and is also deducted from the sundry debtors. So that is very much important regarding the discount on debtors. Discount on debtors, when does it occurs? When does discount on debtors occur? Discount on debtors occur discount on debtors occur on early payment. Discount on debtors, when does discount on debtors occur? It occurs on early payment. And where it is recorded? It is recorded in P&L account. ठीक है? This is very much clear. Two-side treatment is there. First is debit side of P&L account, and then on the asset side, debtors minus provision. So these are the two accounting treatments for discount on debtors. So opposite to discount on debtors will be discount on creditors. Opposite to this will be discount on creditors. So when we talk about discount on creditors, it is the discount shown as an income of the current year. It is the income on current year. So it will be shown on the credit side of P&L account and will be deducted from the creditors on the liability side. That is very much clear. We will do it in another MCQ regarding provision for discount on creditors. Next, we have with us question 209 that is related to partnership. So partnership, how do you define partnership? Question number 204. It could be asked that partnership is there in which section? So partnership is there in section 4 of Partnership Act 1932. Other important question regarding partnership that is related to types of partners. When we talk about types of partners in partnership, there are different kinds of partners who will carry on the functioning of the particular partnership, and for that concern there are we call them different types of partners. So there are nominal partners, there are sleeping partners, there are dormant partners. So these are all the types of partners which are there in a partnership firm according to Partnership Act 1932. So I have a question that nominal partner, who is a nominal partner? He does not contribute any capital, nor he does participation management, nor does not he have shares, but he has the unlimited liability. So who is a nominal partner? Question number 205. Who is a nominal partner? One question. Second question, does he contributes capital? Second question. So nominal partner is the partner who does not contribute the capital. So the answer is very much clear. No, he does not contribute any capital. And the liability is unlimited. But has unlimited liability. This is one of the question, who is a nominal partner. Similarly, we have partner by estoppel. He is the same. Partner by estoppel, partner by holding out. Next one important partner we have sleeping or dormant partner. Question 206. Who is the sleeping or dormant partner? Sleeping or dormant partner is the one who contributes the capital but does not participate in management, but has limited number of shares and has unlimited liability. One important thing I am going to make it clear, any partner is there, he or she has unlimited liability. Sleeping or dormant partner contributes to the capital but does not participate in management. What is happening in management? Sleeping partner does not have any control. Whatever is happening in management. Then next, he has the shares. Obviously, he will have the shares in the management. So first three types of partners, that is active, sleeping, dormant, or the secret partners, they have the shares with them, but the nominal partners, partners by estoppel, partners by holding out, they do not have the shares with them. So this is the basic difference we are talking about in case of partnership. Question number 207. Question number 207 we have with us. Question number 207, one important thing, that is a public company and a private company. This difference obviously will get a huge advantage in the exam. This question, what is difference between a public limited company and a private limited company? When I talk about the difference between, one is a public limited company, other is private limited company. Whenever we are talking about this difference, public limited and private limited company, we need to remember the whole chart because that is very much important for the exam. So the difference between public limited and private limited company. Number of persons in a public limited company 7, and it could increase to unlimited numbers. Then number of directors we have 3, and it is compulsory for a public limited company to get listed and issue the shares. Private limited company, minimum 2 members, maximum 200 members, and after that they have number of directors 2, and it is not compulsory for them to issue the shares, and they do not, and it is cannot invite the public for IPO. This is the important question. So public limited company and private limited company. First, let's talk about the number of members. Then next, let's talk about number of directors. Then next, let's talk about shares. This is the important question we are talking about. Members 2 to 200. Am I writing correct? One person who has come to know that who will issue shares, they will do a correction and will write down 7 to unlimited, private limited company 2 to 200. Number of directors 3, number of directors 2. Shares cannot invite and they can invite, and private limited company cannot invite shares. That is the IPO. So this is the basic difference between a public limited company and a private limited company. Then next we have with us the difference between a general reserve and a specific reserve. General reserve, general reserve. These are the very important MCQs we are talking about. And now we will talk about the general reserve and the specific reserve. That is very much important. What is a general reserve and what is a specific reserve? So, what is the difference between a general reserve and specific reserve? So, general reserve is also called a free reserve. Specific reserve is for a particular purpose. That is called a specific reserve. So this is the basic difference between the general reserve and the specific reserve. Then we have capital reserves. Capital reserves are not available for distribution. So I have next question about capital reserves. 209 question about capital reserves. This is the aim. So capital reserve can be used for two things. First is for bonus issue, that is issue of bonus shares, and secondly writing of capital losses. Write off capital losses. These are the two purposes of capital reserves. Then we have an important ratio, that is gaining ratio. The ratio in which continuing partners acquire the outgoing partner's share, it is called a gaining ratio. Then we have shares with us. Preference shares we have with us. And then we have section 78, that is issue of shares at premium. This is the last question. This is very much important. Question number 210. Question number 210, that is section 78 of the Companies Act. Section 78 of Company Act 2013. So what does section 78 of Company Act 2013 says? It says that the issue of shares at premium could be there. It could be used for four purposes, that is three main purposes. First is bonus shares, then next is preliminary expenses, then next is redemption of debentures. Bonus shares, then next we have preliminary expenses, and next we have redemption of debentures. These are the three purposes of section 78 of the Companies Act 2013. So after this we will continue the class with question number 211, and in that we will do the important MCQs related to accounting. So these are the section 78 of Companies Act 2013. So after section 78 we will cover the next MCQs. Thank you so much. Do like and share and subscribe to my channel. Thank you.